Hey everyone, and welcome back. I'm the part-time economist, and in today's video I wanted to talk about the difference between a spread and a commission and why it's important if you are considering becoming an investor. Now obviously anytime I talk about the stock market or anything like that, I want to be clear that this is not a financial advice video. I am not a financial advisor, and I am definitely not your financial advisor. So please do not make any kind of investing or money decisions based off what I say in this video. That being said, I do think it's important to talk about the difference between a spread and a commission, specifically because more and more brokerage firms are going with a commission-free model. And I don't want people to assume that anytime they see commission free, it means that there's going to be no fees whatsoever. So I want to talk about some of these fees, not to criticize brokerage firms or anything like that, because they do need to make a profit, but so you have a better understanding. With that being said, most people, even if they're not super into finance, they have this general idea that a commission is some kind of a fee that you pay for buying or selling stocks, which, if we look at this definition by Investopedia, is actually pretty accurate. A commission is a service charge assessed by a broker for handling the purchases and sales of securities for a client. So this is a service charge. You want your broker to do XYZ, they're going to charge you a fee for that. Now, we are very fortunate because, like I said, many brokerage firms are moving to a commission-free model where you can buy and trade typically online for free. If you call their representatives, they'll usually charge you a fee to cover that representative's time, but more and more you can trade online for free. And it was not always like this. Back in the day, there were some really high charges. I remember when I started trading, I think it was like $4.95, and I could do my trades. Now, whether I wanted to trade one stock or 15 stocks, it was per transaction. So obviously, $4.95 isn't a huge amount, but it's still not free. So the key thing I want you to keep in mind with the commission, it's the service charge, right? And it's typically assessed in dollars, like a flat fee, but it can also be a percentage, a value of the transaction. So a 0.1%, a 0.5%, 1%, whatever the case may be. That is a commission. It's a fee that is applied to a transaction. It is something that you are paying to that brokerage firm. However, a commission isn't the only thing that can impact your price that you get or the price that you pay, because there's something that is known as a spread. Now, a spread can have several different meanings in finance, but for our purposes, it refers to the difference between two prices. More specifically, something known as the bid-ask spread. And to give you an example of this, let's just forget about the stock market for a minute. Let's suppose that you go to a coin shop and you're the second person in line. The person ahead of you is selling a 1 ounce generic silver coin, and the coin dealer gives him $40 for that coin. That customer leaves the shop and you're next in line, and you say, that coin right there, that one that he just brought you, I want it. And you're thinking that you're going to pay $40 for that coin. The coin dealer says, yeah, you can have it for $45. Now, there's clearly a difference between what the coin dealer is willing to buy that coin and what they're willing to sell that coin. In this case, it's $5. That $5 difference is the bid-ask spread. Now, here's the thing that is different from a commission. The dealer isn't charging you anything. He didn't make the customer before you pay him $2.95 to purchase that coin. The spread was factored into the transaction, and out of that $5 spread, the coin dealer is going to keep the lights on, pay the employees, everything like that. And this is critical to understand. The commission, as we saw in the Investopedia definition, is a service charge, right? You're having to pay that. The spread is reflected in different prices. Just to give you another example of that, let's take a look at GLD, which is the SPDR Gold shares. If we look here, now this is obviously an old quote, but if we look at it, we see that it was quoted at a bid of $181.89 and an ask of 182.18. The difference, the few cents between those prices, is going to be the bid-ask spread. And you might be wondering, how do I keep bid and ask separate? The way that I like to remember this is I say to myself, keep the B's together. What does that mean? The bid is the buyer. It's what someone is willing to purchase at. The ask is the price that someone is willing to sell at. So if you've ever been to a flea market, you see something on the table you like, you say, how much are you asking for that? In other words, what would you sell that for? To remember the bid, I always think back to The Price is Right, where he would say, what do you bid, right? And what he's saying is, as a customer, as a consumer, what would you give to purchase this jet ski, this new kitchenware set, whatever the case may be? So the bid is the price that someone is willing to buy. The ask is the price that someone is willing to sell. The difference between those two is the bid-ask spread. So even if you're not getting charged a commission in our coin dealer example, you might go to the store, and if you're trying to sell your silver coin, you're going to get less than you expected because there's that spread in there. If you're going to purchase, you're going to pay more than you expected because, again, the spread is in there. So either way, it's just important to know both of those things. So this is where things can get really confusing with the spread, because we were already kind of thinking that a spread is a difference between two prices, the bid and the ask, but a spread can really be the difference between any two prices. So if we have a brokerage firm or some kind of firm, and they are filling our order by going to their own order fulfillment, right? They might charge us a spread based on the difference between the price that they can purchase at and the price that they sell to us. Or they can use the bid-ask spread as the basis for kind of calculating a commission. So we see here Capital.com. Again, I'm not affiliated with them, not saying they're good, not saying they're bad. It's just an example I found. It says that you have a position of one contract with a spread of 1 point. Now the spread is 1 point, but if we see here, to open your position, you will pay half the spread and likewise to close it. So again, I don't have experience with them, but it looks like not only do you have that bid-ask spread, but they're using the spread as a basis for calculating a fee. So it can get really confusing really fast when it comes to spreads and commissions, and check this out. Even under the Investopedia article of commission structures, it specifically says some firms offer a fixed spread. So they're even counting in this example a spread under their commission structures category. So it can be confusing, but the general way that I like to keep it straight in my mind, and again, this isn't financial advice, this isn't telling you what to do, the way that I keep it straight in my mind is that a commission is something that I have to pay, right? Think of it like a fee that I'm literally having to pay dollars and cents for. When I think of a spread, I like to think of it being factored into the price. So the coin dealer, they're not telling me, yeah, I will pay you $45 for this coin, and then you owe me $4 for processing the transaction. It's just already included in that difference between what they're willing to buy and sell at. So like I said, obviously not a financial advice video, but especially with more and more brokers going to this commission-free model, I think it's important to talk about the difference between a spread and a commission. And also, one last thing that's important to understand is that different industries have different standards. So if you're talking about stocks and equities and things like that, typically we're thinking of commissions, right? If we're talking about the Forex market, they may rely more on spreads, right? So if you're doing a Forex trade and they're saying, yeah, there's no commission, they might still be having a spread, right? So just keep in mind, just because they're not charging a spread, they may be charging a commission. Just because they're not charging a commission, they may be charging a spread. So it's always important to read the details to understand the policies of the specific brokerage firm that you're working with. So I hope you all found this video useful. Thanks for watching, and I'll see you next time.